Friends, today we are going to discuss about financial statement analysis. That is, how to interpret the given financial statements. Interpretation is important because with interpretation you get meaningful data and this data is useful for decision making. The financial statement can be done in various ways. Today we are going to discuss about two techniques of financial statement analysis, that is common size statement and comparative statement. With respect to your 12th standard studies, you are having different tools of financial statement analysis. Out of them, two we are going to discuss today, that is common size and comparative statement. The other two are ratio analysis and cash flow statement will be dealt in further videos. Let's start up with comparative statement. It is also called as horizontal analysis. The comparative statement compares the financial data at any 2 points of time. The 2 points of time may be the quarters, maybe half years, or normally it is annual. It shows either increase or decrease, that is change in absolute terms, that is in terms of money amount, as well as in terms of percentage. I'll just show you the format of comparative statement. The comparative statement is something like this. It will be having particulars, the previous year figure and the current year figure. Therefore, it is called as comparison of 2 years horizontal analysis. The third column C is absolute change and the last column is percentage change. In absolute change, we calculate the difference between the current year and the previous year. Current year minus previous year. Whereas in case of percentage change, we do the calculations as C upon A into 100. C is the absolute change, A is the previous year value. For more clarity, let's go for some illustrations. I'm showing you how to do the calculation of comparative statement with respect to P&L account. You know the format of P&L account, which includes revenue from operations, expenses, the difference is net profit, then tax is subtracted and final figure is NP after tax. The first two figures, the first two columns, that is previous year and current year, will be available. We will do the subtraction B minus A to get the calculation of C, that is absolute change. Here 20 lakhs minus 10 lakhs, again comes 10 lakhs, 15 lakhs minus 6 lakhs, 9 lakhs, 1,80,000 minus 60,000 comes 1,20,000. Same way, the difference between the column B and column column B and column A will be recorded in column C. This percentage change is nothing but C upon A into 100. That is C upon A into 100. Revenue from operations, the change is 10 lakhs. Original value previous year is 10 lakhs. Hence the percentage change is 100%. With respect to cost of material consumed, the change is 9 lakhs. With respect to previous year 6 lakhs. Hence the percentage change is 150%. With respect to other expenses, the other expenses are only rupees 60,000 previously, now went to 1,80,000. The change is 1,20,000. The change is 1,20,000. Originally 60,000 multiplied by 100 gives you exact 200% change. Let's take an example of comparative balance sheet. It will also have particulars, previous year figure, current year figure. Absolute change will be calculated in the same way as we have calculated, that is C minus B, B minus A, that is current year figure minus previous year figure, and the D is calculated as C upon A into 100. Here the calculation shows the current year figure is 20 lakhs, previous year 15 lakhs, change is 5 lakhs. Current year figure is 3 lakh, previous year 4 lakh. The difference is 1 lakh negative as the value has changed. Previous yearly it was 4 lakhs, now it is 3 lakhs. The difference is 1 lakh rupees negative. Now see how the calculations are done. With respect to share capital, the change is 5 lakhs. Original figure previous year is 15 lakhs. 5 lakhs upon 15 lakhs gives you 33%. Reserves, 1 lakh change negative. With respect to previous year 4 lakhs, the percentage change is also 25%, that too negative. I hope the calculations of comparative balance sheet and comparative P&L is clear to you. The next is common size statement. It is called as vertical analysis. With respect to common size statement, we have to be careful while preparing P&L statement and balance sheet. The percentage is calculated a bit differently. With respect to P&L statement, percentage is calculated with respect to revenue from operations, that is sales. Whereas in case of balance sheet, percentage is calculated as total of the balance sheet. total of the balance sheet, either assets or liabilities. As you know, both will be always same. Let's be more clear about how to prepare common size statement. With respect to common size statement, there won't be column A, column B, column C, because you're not comparing two different years. You're comparing all these values with respect to revenue from operations. Hence, it is also called as vertical analysis. Vertical analysis. Now, as we have discussed, consider the revenue from operations to be 100. Consider it as a base, revenue from operations to be 100. As you know, the value of revenue from operation is 2 lakh here in this example. Let's do the calculations. Other incomes are 50,000. Now see how this 7.50 comes. The formula is percentage change is equal to absolute value upon revenue from operations. Revenue from operations are considered as base. Other income is 15,000 upon 2 lakhs multiplied by 100 gives you 7.5%. With respect to cost of material consumed, the cost of material consumed is 1,10,000. Now 1,10,000 will be compared with revenue from operations again. Multiplied by 100 gives you change 55%. Similarly, all the other values can be calculated as a percentage of total, as a percentage of revenue from operations. Let's see how the common size balance sheet is prepared. As we have discussed, we will be considering total as 100. Percentage of total will be calculated. Whether it is liabilities or it is asset, the total will be considered as 100. Let's take an example. Share capital is 6 lakh, total is 12 lakhs. With oral calculation also, you can say that share capital is 50% of total of the liabilities. Similarly, the calculations are done. Percentage is equal to absolute value upon total of balance sheet into 100. 6 lakhs is the share capital, total is 12 lakhs, multiplied by 100 gives you 50%. Let's take trade payable. Trade payables are 2 lakh rupees as compared to the total of 12 lakhs. 2 lakhs divided by 12 lakhs multiplied by 100 gives you 16.67%. 16.67%. It is true with assets also. Let's take an example of tangible assets. 5 lakhs upon 12 lakhs. Tangible assets of 5 lakhs. Total is 12 lakhs. 5 lakhs upon 12 lakhs multiplied by 100. 41.67%. 41.67%. The only thing to be remembered is how to prepare common size statement while taking balance sheet, the total of assets or total of liability as base, whereas with respect to income statement, total of revenue from operations will be considered as base. Thank you. I hope you have understood the concept.